Hello and welcome to the Adansonia Global Opportunities Portfolio Update for November 2023. Our disclaimer, I'll take it as read to move forward. So the month of October was another good month for the portfolio, outperforming a falling market. The portfolio was down 40 bips versus the MSCI World Accumulation Index in Aussie dollars, down 2.1%. Portfolio has performed pleasingly in the sense that it has outperformed rising markets, it's outperformed in falling markets, and over the rolling 12-month period, we've outperformed the index by 12.5%, as you can see on this table. Since inception, which was end of January 2019, the portfolio has returned 14.1% per annum compounding, outperforming the market by 4.8% per annum. Portfolio currently has 13 stocks and roughly 6% cash. Nothing was traded in the month of November. The last trade was Brookfield, which we added to the portfolio in the September month. And we also spoke about that in the September update. So very happy with the way the portfolio is performing, and we hope it continues. Instead of a stock of the month, I've decided to basically put together a couple of little macro charts. So the first chart here basically looks at the performance of the tech sector versus the general market, and also tech companies which were discussing AI. And as you've seen from this chart, basically for the year or the calendar year to date, AI has been the theme that's likely been driving the market. The Magnificent Seven stocks, which are highlighted in yellow, are largely the main culprits behind AI and driving and what's been driving the market. You can see here highlighted in yellow that these companies have a meaningful weight in the overall S&P 500, but also are carrying some very meaningful or large forward multiples. And some of these companies are incredibly overvalued and for example, Tesla, which is trading at 56 times prospective PE multiple. However, if you actually strip these out of the S&P 500 or the XFANG index, which is in this table, you'll see that the general market moving forward is actually trading sub 13 times or 12.9 times, which is actually really quite attractive. And it's just really highlighted that we've had a variable speed market, variable speed emergence of stocks, where a few heavyweight stocks have largely been driving the market, and the market has broadly, the rest of the market, or the other 493 stocks, have largely lagged the performance of these tech companies with AI. As we continue to say in our presentations, in our philosophy, earnings growth drives share prices, and as you can see here in this table, there is earnings growth. There is forecast quarterly earnings, basically out to the end of 24. And while obviously this is also going to be driven in part by the Magnificent Seven or the companies that have tech earnings, and talking about prospective AI, which are largely priced or fully priced in our view. There is the rest of the market, which also basically has, this supporting tailwind of earnings growth, which we believe will be constructive for markets moving forward. This is an interesting chart. So effectively, this chart looks at the performance of the equity market or the S&P 500 versus gold. Gold is a store of value in bear markets. It's a store of inflation, or a prospective store of inflation. Prospective hedge against inflation or hyperinflation. So when we look at the performance of I guess a bull market versus a bear market asset, you'll see that we are generally in a secular bull market, and essentially this is our view, that essentially we can remain constructive on markets. There is value outside of the AI stocks. There is earnings growth outside of the AI stocks. The AI stocks are largely priced. However, there are 493 other shares that we believe haven't enjoyed the same theme driving them forward over the last year or so. So effectively, we're going to have a variable rate emergence of equities moving forward. And it's a market for active managers, for sure. Again, as you've seen, some of these AI stocks, have very large weightings in the index, and a passive portfolio will put you into these stocks, which are ridiculously, put you into some of these stocks which are ridiculously overvalued. So as I said, look, we own several of them out of a portfolio of 13, and we're very happy with still like with the likes of Alphabet, and Amazon. Microsoft is probably fully valued in our view, and we may trim some of that. But look, we believe that stock still has a very prospective outlook. Anyway, again, we continue to thank the people that invested with us for their continued support. Our contact details are again on the bottom right of this page, and I look forward to speaking to you next month. Okay, thank you very much. Again, please feel free to contact either Tony or ourselves, either by mobile or on the inquiries line on our website. Okay, till December, speak to you then. Thank you.